Well, with Australia's two major cities in COVID lockdowns, you would think the economy would probably struggle, but the GDP numbers arrived yesterday and they looked pretty good. But let's dive a little deeper with Matt Grudnoff from the Australia Institute. Matt, great to see you. When the numbers arrived, what did you think?
Well, they were certainly above expectations, but we've got to really remember these are for the June quarter, so that was for April, May and June.
Yeah.
And the lockdown in Sydney didn't start until about, I think, the last week of June, and certainly the lockdown in Victoria and Melbourne didn't start until well into, July. So none of those lockdowns will feature really in these numbers. I think the September quarter, everybody's currently predicting a big negative number because for most of the September quarter, which is July, August, September, we're seeing big lockdowns.
So firstly, for people that don't know, what are the GDP numbers and how is it sort of calculated, if you can break it down?
Yeah, sure. So GDP is everything that's made and sold in the economy, and it's also the sum of all incomes in the economy. So it's basically all the stuff we made in Australia, and GDP growth. So for this quarter, it was up 0.7%. It means we made 0.7% more stuff than we did last quarter.
I like it. I like that. So tell us what you did see, and then obviously we'll touch on when we might see more of an impact in future when it comes to the numbers. But when it came to these numbers, what did you see exactly?
Yeah, well, so people might not be feeling more wealthy or feeling richer, and that's actually because if you look closely into the numbers, disposable income is basically the amount of money that shows up in your account each payday. So it's your spending after tax, your income after tax. That actually went down, and the reason it went down is the government's been spending some time withdrawing stimulus, particularly stimulus for households like JobKeeper, like the coronavirus supplement. All the other sort of support mechanisms are slowly being withdrawn, and in the June quarter, that actually decreased. That the government withdrew its spending faster than incomes rose. So disposable income actually fell. So the average amount that people saw in their bank accounts actually went down for the quarter.
So in terms of moving forward, because at the moment the numbers are okay, but do you foresee that in the next quarter we will really see this impact of what the lockdowns have had?
Yeah, well, so we're in the beginning of September, so we've had 2 months of the next quarter already, and I definitely think we're going to see a negative number. It depends on how big. I mean, the Sydney lockdown doesn't look like it's going to end. The Victorian lockdown doesn't look like it's going to end. In the ACT, we're only small here in the ACT, but we're in lockdown as well. It's certainly going to be a negative number for the September quarter. The question then is a technical recession, which is a horrible definition for a recession, is 2 quarters of negative economic growth. And so if we had a negative quarter in the September quarter, we would then need a negative quarter in the December quarter. And if the lockdowns continue up to Christmas, we may well see that the December quarter as well is negative, simply because the lockdowns are extending, particularly now that the 2 biggest states have decided that the way out of these lockdowns is not through suppression, but rather through vaccination. And they're not likely to have kind of the vaccination levels to open up until at least November or December.
And just a final one on Sydney and New South Wales, of course, the biggest economy in Australia. How much of an impact have you seen to this point? And do you think we will see, given the lockdowns are harsh, they're lasting for a long time, that this will have on the broader economy of Australia, considering it's such a dominant force?
Yeah, these are really weird times. To be honest, we've never had a recession like the one that we had last year. It was the first recession in history where profits actually went up, for example. And what we found is that when you go into lockdown, when you come out of lockdown, savings rates are quite high during the lockdown because you can't go anywhere to spend money, and people tend to rebound in their spending. So what we found is more than any other recession, we've bounced back quite quickly, and part of that is to do, as I said, with the savings and the fact that when people come out of lockdown, they tend to spend more. The other part of it, and a really important part of it, was JobKeeper and the wage subsidy that kept people employed and kept people's incomes up. Now, the government has gone with a different kind of support for this second sort of lockdown. and that's through direct payments, a bit like welfare payments. And so it'll be interesting to see whether that has the same bounce back as JobKeeper had. I'm hoping that it does, but given that it's different and we're really not quite sure, it might be that we don't bounce back quite as fast. And if that's the case, then we might see higher unemployment, particularly into early next year.
Great to chat as always, mate. Thanks again for your time. We'll talk really soon.
Thanks for talking with me.
The bottom 20% get nothing. They're really unfair tax cuts.
People want to see much stronger action from the government when it comes to climate change.
It's no coincidence that we have a wages crisis in Australia.
Transitioning to net zero emissions, it doesn't seem like there's much room for gas.